Welcome back. Our next guest believes market conditions are weak, breadth is weak, and he'll talk about that right now. Paul Harris is partner and portfolio manager at Harris Douglas Asset Management. Thanks for coming in.
My pleasure.
What is your take on these markets? We spoke to one of your peers yesterday, and he made the point that in the U.S. market, breadth is weak. A small number of large cap stocks, a la the FANG days, are leading the S&P 500 higher.
Right. So I think 90% of the return has come from 7 stocks, right? So you can imagine which ones: Apple, Microsoft, Nvidia, Meta, Tesla. So yes, and then if you looked at the numbers for last month, even although it was a great month for stocks, it wasn't if you were in consumer discretionary or if you were in small caps or in regional banks and stuff like that. So the issue is that the market is very narrow. And the problem also, it's been very range bound, right? So with lots of volatility, but very range bound. So at some point in time, it's either breaking up or breaking down. I guess I would think it's going to kind of break down. And nothing seems to be bothering the stock market, which, obviously people talk about this kind of climbing this wall of worry. Mm-hmm. So, interest rate shock, the war, inflation, and earnings coming down as well. Earnings have come down a fair bit. So none of those things seem to be bothering the stock market at present. So I think that something has to give in that whole relationship, right? So when you looked at earnings actually, they beat, but, that's kind of a funny game with earnings. But generally, earnings have come down. And if you looked at first quarter, second quarter, earnings are down for those in the United States, and then the third quarter and fourth quarter are up. So I think unless you see, as we believe, that the economy is slowing, that you will have somewhat of an earnings recession, and therefore the multiple is too high. So I think that the market has to perhaps adjust to the fact that the stock market is trading at a higher multiple than it should be given the earnings profile. So I think that's one of the things you have to think about. The other thing is that there are many, a lot of, like the Fed. What is the Fed going to do? What's central banks going to do? Clearly, they're probably going to raise 25 basis points, but I think they're probably going to give a very hawkish view going forward because they want rates to stay higher for longer because they have an inflation problem and they can't get that down. So inflation will come down naturally, year over year numbers, but the reality is that they need to be able to bring down inflation to a level they feel more comfortable with, right? So I think that's the big problem where they don't want to raise interest rates because of the volatility in the banking sector, et cetera, but they have to keep rates relatively high for the next little while, I think. Right?
What about the U.S. regional banking sector? We had another one fail, another rescue brokered by regulators. There's all kinds of pessimism out there, including from some pretty knowledgeable quarters about the state of the U.S. regional banking system.
Right. So there's two things. One is that the U.S. banking system is very, very different than ours. So people sometimes compare the two, and they're not. Right. They're totally different.
Right.
And our banks are very safe, and because we're highly regulated, and the stock volatility around what happens in the United States, but that's just stock volatility. It's got nothing to do with our banking. The problem with the U.S. in many ways is that they have way too many banks. I mean, that's come down a lot over the years, but regulation on smaller banks is not as high as the regulation on the larger banks because of 2008. And you saw, those larger banks are actually in very good shape. They're highly regulated. They're stress tested all the time, and those banks are actually not in bad shape, given, and they have a much broader franchise, right? So they've got a retail franchise, they've got an investment banking franchise, they've got they've got asset management businesses. So they're much more diversified, and fee income is a much larger part of the overall thing, whereas regional banks tend to be lending money all the time, right? And that's how they make a lot of their returns. So I think they're in a very different thing, and I think that volatility in regional banks is going to continue because if people feel that, and the problem is you can run out of banks so easily, as you probably know with Silicon Valley, people are just taking their money by clicking on their system, right? Yeah. So it's not like you have to go to a bank to take out your money anymore. So it's much more complicated to run that, and I think there is going to be more volatility around those things. And it's very clear that U.S. banking should be consolidated even further. It was just not set up. It was set up many, many years ago because they didn't want Eastern banks controlling all the United States. So I think that it's created this kind of volatility you're always going to have in U.S. banking, and people should never compare that to Canadian banks.
Last question in this segment: should stock market investors be worried about a contraction in lending from these regional banks? They lend a lot to many customers in their regions. Almost everybody is predicting now that they have no choice but to pull back the amount of money they're willing to lend. Will there be stock market consequences?
Right. So I think there will be, because the reality volatility, one of the things they have been actually pulling back earlier than this, right? But this is going to probably have bigger consequences to that. I think the bigger issue is that they probably lend to a lot of real estate. And I think that's the bigger issue that you have to deal with, whether it's commercial real estate and how do you deal with that issue if commercial real estate is going to have a hard time with some of these banks lending to them. So I think that's the big issue, that you may have to see some more volatility on that side as opposed to necessarily. But I think it's happening. It's been happening before this, but it's going to happen even more because they've really got to change the way. They got to reassess, right, how their banking relationships and what they're going to be doing. So I think you're right. There will be a squeeze on the economy.
That's